right, so here we go again. It is Multifamily Live. Super excited to have Xsite Capital on the show today. How are you guys?
We are wonderful.
Fantastic. Good. Doing great. Happy to be here, Jason.
Well, we are super excited to have you on the show. So we have Leslie and Julius today from Xsite Capital. And whether you come from a lineage of successful businessmen or you're in your first in your family to graduate from college, there comes a time where you have to make some serious financial decisions that can change your life forever. And that was the story for our founding partners, two of which we're talking today, Leslie, Julius, and Tinny, who all came from different backgrounds. And they had one thing in common. They worked hard, they earned healthy salaries, and they wanted to take their wealth to the next level, but they were just trying to figure out how. And after individually investing in various real estate projects and crossing paths with industry veterans, they discovered there was a huge wealth opportunity in multifamily real estate, specifically in the entire industry, an opportunity that many minorities or healthcare professionals were not privy to or really just able to easily access. So they formed Xsite Capital, and Xsite Capital currently has $125 million of real estate or assets under management, works with accredited investors to help secure risk-adjusted returns, helping them earn passive income and ease. Currently, Xsite Capital is expanding in the Southeast and accepting new investors. And we had the pleasure of meeting just a couple months back here. It's great to have you both on the show. And was there, first, how did the two of you meet?
I work as an orthopedic surgeon, and Leslie is a certified registered nurse and anesthetist, so CRNA. And the first time we met in the operating room. I'll let Leslie take it from there.
Yeah. So the first time I met Julius, I was in the operating room, and income, this guy, surgeons sometimes can be very down, but income, this guy was so much energy. We're going to have a fantastic, amazing, nice day. And I'm like, is that the surgeon for this case? I got to know this guy. I got to make this guy my friend. So I just reached out to Julius, and we started talking about real estate. I could overhear some of his conversations, talking about some of the investment properties that he had. So when we started getting into real estate, so we reached out to him to engage, and it's been an amazing journey so far. Unfortunately, that we don't have a tech partner, Tenny, here as well, but so that's how Julius and I met.
That's incredible. And so multifamily, did you so it sounds like, Julius, you actually had some properties first or have done some kind of real estate projects. Was it in the multifamily arena, or what was the urge or the emphasis to dive fully into that arena?
So I actually was investing in single family. And at that point, my main investment strategy was I was doing some angel investing and single family. Leslie at that time was doing single family, which is like just renovating single families, rental single families, doing the BRRRR method. Leslie and my other partner and our other partner, Tenny, had actually met earlier and were the first to discover the fantastic world of multifamily real estate investing. And Leslie had tried to introduce me to it initially, but I thought I knew everything I needed to know about real estate, and I thought I was on the path. And my thought at that point was to acquire a property or two every year and build this huge portfolio of single family homes, and then eventually maybe let them appreciate organically over the years and get some cash flow from them, and maybe sell them as a portfolio eventually. But then at one particular point, Leslie finally, after a lot of persistence, convinced me to take a look at a deck that he put together for a deal that they were looking at. And I felt like, reading through the deck, when I eventually opened the deck, I just felt like this new world was open to me. And I felt like I just couldn't believe that I wasn't previously privy to the information that this deck was presenting. How is it possible that we could pull resources from just individual investors like myself and come together and go down and take these large properties down and take advantage of the economics of scale, take advantage of the tax benefits of these properties, and all the other advantages of this of multifamily real estate. I was having my Eureka moment, and my mind was just completely blown. So from that point on, I called him up and my other partner and said, guys, I'm not just trying to invest as a, as a passive investor. How about we band together and go out and really preach the gospel of multifamily to our community? Because if I don't know about it, and I consider myself relatively savvy with regards to financial investments, then I know a ton of people didn't know about it. And I did do a little straw poll of my close friends and colleagues, and nobody else knew about it. So I knew there was an opportunity there to get the word out there, educate people, partner with people to take down this asset classes, and the rest is history, as they say. And our journey so far has just been a testament to the power of community. So I'm excited.
That's incredible. And, at so many people in your position, just being as busy as each of you are here, just choose the passive route. They just stop there. They sound like, this sounds like a lot of work. This sounds very overwhelming. Leslie, how have you successfully integrated into your work-life balance, we'll call it, or just to have the time capacity and be able to put the energy in this? Because there's a lot of people here today saying, man, maybe they have any kind of job out there. They are just looking for the time. What have you done to make success out of what you're doing and still be able to do everything else that you were already doing?
So for that, it really starts with our why. Because when we discovered multifamily and started talking, I think our CEO Julius alluded to that, and started realizing that a lot of members of our community have no idea that this asset class existed. So putting ourselves in that position, like what if we could create this platform where we could go out and teach the community and tell people about multifamily investing? This would be amazing. So that was something that we're powerfully passionate about. Once you have that passion, everything else adjusts around it, right? So I made changes to my schedule where I picked up the shifts that nobody wants to work. So I do the off-call shifts on Sundays when everybody's relaxing. That's when I'm in the hospital all day. And the advantage to that is that since it's a down day and a day that we do just with emergencies, I have a lot of time on myself. So instead of watching Netflix, I'm reading books on multifamily. I'm doing a lot of research or doing other stuff like that. So we have made those adjustments along the way to be able to accommodate, to have the time for it. And what I've learned is if you have a strong enough reason why you want to do something, you're going to find the time to do it. So we've been able to balance it. And it's just like so much of a joy doing what we do that you find a time somehow to make it work.
Also, just to piggyback off that, I think it speaks to the power of having amazing partners, because what each one of us cannot do, we're able to leverage off of each other's strengths, which complements each other, and we form a pretty strong unit. So our other partner, Tenny, who we call Tenacious Tenny, because it's just like a bulldog and just goes out there and gets things done. He was so committed that he sold his home, moved his entire family to our target market. Wow. At the beginning of this relationship, so that we could be competitive in our target market. So when you have an amazing person like that, who is able to just move and change his life around to sacrifice for the group, and led our acquisition strategy on ground, that was key. I mean, Leslie is incredible with numbers, loves underwriting, and is probably like the mindset guru of the group, and keeps us all on top of our personal development, and we call him Sensei for that reason. So you have that, and then you have someone like me who I love the larger vision and coming up with creative ways of getting our brand out there and interfacing with investors and teaching folks out to kind of learn more about what we're doing and come together. And I'm able to also leverage in some of the goodwill and integrity and credibility that I've built over the years, being in this field of medicine for, close to 10 years now, as an attending surgeon. So we were able to do that. Combining the strengths of all three of us really gave us all the freedom to be able to make it happen. So
yeah, accountability is so huge, right? And so when you take a partnership, it's also just as important for each to identify their role, so each knows where they sit, right? And you each have done it very successfully, because lots of times when I see partnerships having an issue, it's because they're not clear on who's doing what and where their power aligns and where they can put this here. And to everyone listening here, you find the time. You want the time, you find the time. Just even talk about Netflix. I'm sure people can say, oh, yep, there's 4, 6, 8, 12 hours a week that I could take back here. And just kudos to Tenny, moving into the market, right? But if you want it, like, what's stopping you? Maybe it's a short-term pain, but the longevity of what the success will be overrides that, right? Nobody's going to think about the short-term pain. And most people live in the short term, right? They say, oh, well, I don't want to do this because it might discount me, or it might, change my way of life, or it might change how much money I'm making, or just for the short term, right? And that's how most get stuck, because the short-term pain may seem like pain. Oh, I'm going to work another 2-3 hours. I've already done a 12-hour day, right? But they don't look at the longer-term vision here, which you guys have done successfully. So for people listening, talk to us about your current portfolio of the $125 million of assets under management. Talk to us about what that comprises of, and maybe the first deal, how it all came together.
Leslie, do you want to go?
No, go ahead.
So very shortly after we got together, obviously we had invested prior to that as passive investors. So we kind of knew how it worked on the limited partnership side. So we, at that point, then co-general partnered with Viking Capital in the acquisition of a 49-unit, $20 million acquisition called the Griffin in DC. And that was like the business plan was about 7 years condo conversion. And that was acquired at the height of COVID. I think it was May 2020. So there was quite a bit of angst about what was laid ahead and what we were about to experience. But
I want to make one point on that, is that for people listening, don't surpass the point where they said 49 units, $20 million, right? So they did not just say, let me just put my toe in the water and see where it is. They found a good, reliable partnership, and they found a great project and said, okay, we can go all in at the height of COVID, right? So please carry on.
Absolutely. So, I mean, once we decided that this was the way for us, we really did not want to dip our toes in. We went head first. And that was a very enlightening experience, because we were able to watch very closely our senior partners in that particular deal, Viking Capital, and listen carefully to the asset management calls and see how the acquisition process went on. And we were able to also learn how to interface with investors and raise capital, and we leveraged on the experience of our lead general partners to really get that process going. And interestingly, something had to happen at that point. We had to kind of change our mindset a little bit, because I'm an academic surgeon and I was doing this on nights and weekends, and I was a little worried about, are people still going to take me seriously as a surgeon? Are people going to take my paper seriously when I publish? Are people going to, still think that I'm a good hip and knee surgeon? And so I had to go through that process but then I started asking myself, and I give Leslie and Tenny credit for this, because they really helped me work through some of that limitations. Like, why do you have to define yourself as one thing? Why can't you be defined as a great orthopedic surgeon and also as a fantastic real estate investor? Yeah. So I had to work through that, and a lot of that had to do with, I consumed God knows how many podcasts and how many books in such a short period of time. I was reading a book a week or something along those lines, and it was amazing. But anyways, going back to acquiring that first property, we then went at first. Once that mindset was sharpened, we just went right in and we started to raise capital. And interestingly, something happened. We started to realize that we were right. There's a huge thirst for this asset class in our community. And when I say our community, I'm talking about our community of healthcare professionals. I'm talking about our community of immigrants. I'm talking about our community of minorities. I'm talking about, our community of professionals who just are stuck in this W-2 jobs and do not know what to do with their nest egg or with some of their savings. So all of this started to come together, and we were like, oh, wow, we were right. Our hypothesis was right. This is so needed in our community. So we were able to raise the funds for that particular first deal super easily. It was unbelievable. And we actually almost overraised. We were supposed to raise just $500,000. We ended up overraising. We went back to our lead general partners and said, can we raise more? They're like, yeah, keep it coming. And eventually they were like, stop.
Yeah.
And that gave us the confidence that, yes, we are right. Now we just got to go all in. And for our next deal, we were the lead general partners, and that was the acquisition, the 132 unit at Class C property in Columbia, South Carolina, that we acquired for $12.55 million. And and it's been off to the races after that since then.
It's so important too, is that many times, we think like, who would want to invest with us? But especially when you're starting out, right? And especially, thinking about you, and even a lot of us get stuck in what we've done before. And like that has to be our role, like whether it's a job or like a professional sports player or anybody, right? Just to transition to that new thing. Well, how can it be? But breaking that mold. And again, it goes to the accountability and the partnership. You can see the strength there, but even talking to investors, sometimes the most important thing is just let them know what you're doing, right? Because they don't know it's available, right? So we come in our mind to try and predict what the response is going to be before we give people the opportunity to respond. And that happens so many times. And I hear from so many people is that, well, they won't want to invest with me. Well, how do you know? Have you even asked? Right. And now you get to this point, you've created a trusted community. You have a trusted community around you. So what's the worst thing they say? Oh, no, it's not the right time, or no, it's not for me. And then, okay, fine, no worries. But it's there when it's there. And so many people are grateful because they can still, you think of a lot who you just mentioned, right? Working in a W-2 job, lots of taxes, lots of other points right here. So how can they offset some of that with what's happening here in multifamily real estate? But they didn't even know, because what's in front of them is usually the larger REITs or all these other players here. And they think that's all it is. Oh, I can't do that because that's, Blackstone or, whoever is the player out there. And I guess, that you have to be in that level. So I'll never be able to do that. And then they have a conversation with you and you start a new path for them. And that's an incredible journey. And it's so powerful to be able to help them here. So the project, 132 units, right? So that was your first one lead right there. And that's the market where Tenny moved to?
Yeah, well, it's the Carolinas. It's like Penny actually moved to Charlotte, North Carolina. But our target market is the Carolinas, North Carolina, South Carolina, Georgia. Those were the core target markets that we had, and so it was still within the target markets.
This property is in Columbia, South Carolina, which is about a 90-minute drive from Charlotte.
That's fantastic. Well, for Leslie, as you're going forward now, we're looking at opportunities. I'll ask you since you're on the underwriting side, some of the more specific to underwriting side questions here, noting where we're at in terms of price points, how we're seeing cap rates, how we're seeing, the treasury, how we're seeing, interest rates. How are you looking at your modeling now today compared to potentially what you were doing 12, 18, 24 months ago?
Oh my God, it's like finding a needle in like multiple haystacks. It's difficult to find deals that work these days. We're reviewing a ton of properties to even make a deal look sense. We're making some changes to our underwritings, taking into consideration the changes that are happening in the economy. For example, like year-over-year expense, trying to adjust that with the inflationary cycle that we're in. Even like the accounting for changes in expenses from like employment, like the salaries for employee on staff and other stuff. So, and the cost for materials for value add. So making some changes to that as well. And we're being extra conservative on our future projections, just given the cycle that we're in. We all know interest rates are going to increase. At least the Fed has signaled that they're going to be some interest rate increases in the next year. So we all know that's going to happen. So we're definitely projecting increase on exit. We used to project 10 basis points annually on some of the projects that we on the road in the past. in some projects now we're projecting 15 basis point on exit to see if it still makes sense for us to go in the deals. So
you're talking about 15 basis points per year.
Per year.
Per year. Okay. Yeah.
Yeah. 15 basis point per year
Yeah.
to see if it still makes sense for us to go into a project. And
standard is still with standard. You're doing 10 usually or
yeah,
point
10.
Yeah. Got it. Yeah.
And right now too, the other thing is we're focusing on markets that are on the growth trajectory. Paying a lot of attention on the demographic data to see everything that's happening in each market before we jump in to start looking at properties in those markets.
Yeah, it's incredible. I was talking to a lender the other day, and he said he had about 80% of projects that he's been speaking to are having cost overruns on their construction budget right now.
Wow.
And it's pretty dramatic, right? And so I don't know if it was just, pie in the sky underwriting, or if it was just cost really just hitting them hard, or labor, or what. But he's saying he's seeing that pretty over the top across projects that he's been looking at right now, which is speaks to a lot, right? And that the timing getting delayed with everything else that's happening with the labor shortage, and there's a lot of pieces you have to plug in the puzzle. And one of the things with multifamily is it doesn't move quick, right? It's not like you can go in there and like, let me flip this house, and this is a vacant house, and just roll, right? There's 50, 100, 200, 300 people living there that you're trying to work around everything with schedules and everything else. And it can be a beast if you expect everything to go perfect. So that's really good points, especially thinking about, just inflation and the impact on expenses. So thank you for sharing that there.
Yeah. And one other thing, Jason, that we did that on a previous property that is helping us right now, which is something we learned from our mentors, is having a lot of cushion on the deal going in. Because things like this can happen where you estimate expenses based on what the economy at that point is at that point in time, that things change during your business plan without having any kind of cushions that might really mess up with your returns. So the cushion that we underwrote in our deal going in is helping us now with the value add, even with the changes in expenses. So and it's something that we continue to do on every deal that we look at.
Guys, I love the story. Leslie and Julius, thank you so much for coming on the show, sharing your story, and for everybody you're out there helping. Thank you for having the, we'll say, mental strength first, but then strength to carry through, because there's a lot who start and just say, oh, it's too much, right? But it's just the commitment and the carry through are just everything in life. So I really appreciate you both coming on and sharing your story to future success for both of you. For everyone here that's listening, please tell them the best to reach out to you guys and learn more about your company and projects you're working on.
So our website is www.Xsite Capital. That's XSITE capital.com. And you can reach out to either one of us. Mine is Julius Oni at XSiteCapital.com. And Leslie?
It's LAWASOM at XsiteCapital.com. That's Awasom at XsiteCapital.com.
So you listeners have heard it here. If you are telling me you don't have time, or you don't have energy, or but you want it, then you have to look at what you're doing each and every day, because you're coming from two people that have plenty of excuses they could give you of reasons why they wouldn't be able to go out there making it happen, and they're making it happen in a huge way. So thank you both for, again, coming on the show. We'll talk to you shortly.
Thanks so much, Jason. It was such a pleasure.